Hello everyone. Today we will touch on the topic of stop loss. Why do traders get stopped out? Let's figure it out. Today I have prepared a small presentation for you, and in this presentation I have schematically illustrated why traders get stopped out. Let's go. The first reason traders get stopped out is due to emotional trading. Emotions. The main thing is to control emotions, because without them, trading will turn into a casino. The secret to controlling emotions lies in discipline. Guys, learn to control yourselves emotionally. Don't rush into a trade. Set your stop loss correctly. Set your take profit correctly. Don't give in to emotions. It doesn't matter what has happened in your life. The most important thing is to sit down at the computer and trade your deals wisely without succumbing to any emotional phobia. Next, we have trading against the trend. One of the common mistakes that causes traders to get stopped out is trading against the trend. In this diagram, I have schematically illustrated an uptrend. That is, we are going up, removing liquidity, going up, removing liquidity, and so on. Many traders mistakenly enter short positions when the structure breaks. But this opinion is incorrect because one must understand the context we are in. And in fact, we are in an uptrend context, so we should consider positions in long. From what values should we consider long positions? We should consider positions according to the trend. In this case, there is either an imbalance or a liquidity pool, or some area of interest from which we are bouncing off, removing liquidity and continuing to move upward. If it is convenient for you to understand the topic and this image by considering it an imbalance, let it be so. Let's assume this is an imbalance. We are removing liquidity from this imbalance and continuing to move upward. Therefore, many traders mistakenly think that a structure break is an entry point for us, specifically in this situation. But this opinion is incorrect. Next, let's talk about incorrectly set take profits. Many, for example, see that we have liquidity removal and a structure break. Indeed, a really good position is the break of structure, and we can enter short here. In principle, I would also add some kind of test. That is, we make a break of structure, perform a test, and go down. Where can we set our take profit? We should set our take profit before the nearest point or area of interest. We should not work with points that have already been processed. We should only work with the nearest points and either take liquidity from them or touch them. There is absolutely no alternative solution available at this moment. We must proceed to the next step without any delay. Next, I would not enter this whipsaw because whipsaws happen quite often in the market. I do not participate in such situations because, in my opinion, it is immediately a losing trade, and I experience a moment of uncertainty when the price does not show a clear direction of movement. I will not go into details, as we have whipsaws happening on both sides. Therefore, I do not like such whipsaws. I do not participate in them because I believe that traders only lose money on such movements. Next. Many traders make basic mistakes because they cannot control their emotions and do not stick to their trading system. Also, many traders do not wait for the candle to close firmly above the breakout and open positions on breakouts before the candle closes. That is, once again, schematically here, we have an incorrect trade depicted. Why? Many traders think that in this situation we have a boss here, meaning a break in structure. But in reality, this is not a boss because we did not break the structure here. We did not close above this level with the body of the candle. We only removed liquidity, went down, and made a test. And at this test, one could enter not in long but in short. And how do losing traders act? They think that if we drew a shadow and went beyond the level, updating this high, it actually means we broke the structure. But in reality, no. Many do not wait for the candle to close and think, now if we break this level, then 100% the candle will close tightly. I will wait for this candle, but I will enter a little earlier. And what actually happens? What actually happens is a reversal, liquidity removal, a test, and a move down. Therefore, the most important thing here is to control your emotions, wait for your trades, wait for your situations, and only then will you be profitable. Trading is not just about risk management, deposits, yachts, airplanes, and so on. It's about controlling emotions. Control your emotions. So, that's how it is.